So the first one I'm going to talk about is the Form 926. So the Form 926, I guess simply put, it's used when you have a U.S. shareholder that makes a contribution to a foreign corporation. This is one of those forms that's actually not provided in the Schedule K-3 as its specific section, so we're kind of back in footnote land. The important thing to point out with this schedule or this form is that it's required by the individual. So a partnership or an S corp will never have to file the Form 926. So that's why that information is always in the K-3 information. So you always have to look out for it at the individual level. It'll never be filed on behalf of the partner or the shareholder. Let's get into the actual rules here. So an overview of the reporting requirements. So the practical rules here, there's really two numbers that you just ultimately have to memorize and know or be aware of. It's 100, the way I think of it, it's the 100,000 and 10% rule. So if an individual who indirectly owns, or if an individual indirectly contributes either more than $100,000 to a foreign corporation, or they own more than 10% of that foreign corporation after the contribution, then there is a Form 926 requirement. And I mean, more technically with that, it's applied on an annual basis per foreign corporation. So, I mean, you could make two $99,000 contributions to two different foreign corporations and not have a 926 requirement, assuming you don't own more than 10% of them after the contribution. But if you make multiple transfers to the same foreign corporation over the year and it adds up to more than 100,000, you have that 926 requirement. Again, it's not called out in a specific part of the K-3. So there is a checkbox in box 13, and that parts to look out for there. It calls out that there's likely going to be a 926 attachment, and you just have to look into the footnotes, and we'll look at an example of that. Let's see. And then the potential penalty for not filing the 926 is 10% of the fair market value of the transfer. So, I mean, you can see a situation where, I mean, the penalty can be very small. And you might see this if you have foreign corporations that clients fully own, and they set it up and maybe they put $1 into the foreign corporation to set up the foreign corporation. I mean, technically, it's not $100,000, but they own more than 10% of it. So technically there's a 926 requirement, but you're looking at a 10-cent penalty, on $1 contribution. But with these, you do have to look out for, obviously as the contribution grows, the penalty grows. But anyway, so let's look at the example here. So the 926 example. So this first part, again, I would generally have looked at the K1 first to get an idea of what the income makeup is, the ownership information. Not that critical on the 926 side. So the K3 itself, this actually doesn't give us much information because there's not a part associated with with the 926. But here in part 1, this box 13, that's what you check if there's 926 information. There's other international forms that could be included in here, but they're pretty rare. The main one that you see if this box 13 is checked that means you're going to see 926 footnote of some kind. So that gives you your indication when you dive into the footnote part, to be looking out for that. And there's some other things here, obviously, 8865, but we're focused on the 926 for this. So this is the footnote. This is a very common footnote, what it looks like. I mean, they give you, and just so you know, I've pulled out all of these examples. I've pulled out the taxpayer specific information. So you'll see that a lot of blanks there, but generally you'd have this whole thing filled out. And so you look through here, and the things we're interested in, remember, again, it's the 10% or $100,000 rule. So the owners, here we have a contribution of $3,500, and at the owner's share after, not sure why that's blank. I might have accidentally taken that out, but the point is it's less than 1%. It was like a fraction of a percent. So he doesn't meet the $100,000 rule, doesn't meet the 10% rule. The other thing you have to be real careful of, in this case, it doesn't matter because, the other thing you have to be careful of is whose perspective are we looking at here? Is this the transfer of $3,500 from the partnership to the foreign corporation, or the partner's share of the partnership's contribution? And they're going to spell that out in here. I mean, here it even says owner's share of the fair market value. So that's talking about the partner's share of the partnership. Here it doesn't matter because even if it was the partnership that contributed it, there's no way we'd get to 100,000 or 10%. So it doesn't really matter. But if you see a contribution that says 110,000, you need to know whether that's the partnership's share, the partnership's contribution, in which case you have to pull that back based on the partner's ownership percentage, or if that's the partner's share. But anyway, this is a very common 926 scenario. You'd see the box 13 checked and a footnote that looks something like this that gives you the information you would need to file the 926. But what you're looking at is that 100,000 10% rule. In this case, they don't meet either of those rules, so there's no partner level Form 926 requirement here.